Welcome to In Depth for a closer look at what is making mining headlines in the Americas. A quiet news flow period was broken this week with the announcement of several proposed transactions. Mining Week's deputy editor for North America, Lizzo, who is based in Toronto, Canada, joins me to discuss these issues. Welcome to the show, Lizzo.
Hi, Martin.
Let us start at the top. Which is the biggest deal that has been announced so far?
Yeah, well, the certainly the biggest transaction by deal value, as well as I think the most interesting one globally, is the announcement earlier this week that Peabody Energy, that's the biggest US coal producer, together with ArcelorMittal, a big steel-making giant, have come together in a joint bid for Australian coal miner MacArthur Coal. Now, Peabody Energy actually originally bid for MacArthur last year and ended up walking away amid uncertainty surrounding the Australian government's proposed super tax on the resources industry. So now Peabody's come back. It owns 60% of the bidding company, and ArcelorMittal's got the other 40%. And they announced earlier this week that they have offered 4.7 billion Australian dollars for MacArthur Coal. Since then, the companies have announced that the transaction value has actually been increased slightly to $4.73 billion. And basically what Peabody and ArcelorMittal have done is they've agreed to add a dividend that will be payable to MacArthur shareholders over and above the offer price that they're offering in the acquisition. And in exchange for that, MacArthur has then agreed to allow them access to do due diligence for the acquisition. So I think it's an interesting one. It basically gives ArcelorMittal and Peabody metallurgical coal mines in Australia, which is the biggest exporter of this sought-after commodity used in the manufacturing of steel. And I think certainly points to the demand and the pressure that companies are feeling, going around the world looking for resources, looking for new production of these key commodities.
There's also been some activity in copper.
That's right. Copper, sort of copper mixed in with platinum group metals. It's an interesting one. Stillwater Mining is a US mining company. The company produces platinum group metals, but mainly actually palladium more than anything else, from two mines in Montana. And the firm, as I said, it really has always been a platinum group metals company. And now they've come out and announced an acquisition of a Canadian junior company, Peregrine Metals. And the purpose of the acquisition is Peregrine's flagship asset, which is a relatively earlier stage copper project in Argentina. And the transaction is interesting on a number of levels. As I said, Stillwater really has been focused on the platinum group metals and has been viewed by analysts and investors as a way to get exposure to the platinum market, or the palladium and platinum market, if that's something that you're interested in. And but they would have gotten a little bit of copper production coming out of another new project, the Marathon project, that's in Canada. But really, assuming that this project in Argentina does come through development and into production, it is going to result in a significant shift in the profile of Stillwater once they get to that point. So that's on the one hand, this sort of a diversification, if you want to put it nicely, dilution of their focus, is what some analysts have said. And then on the second aspect of the deal is that Stillwater has agreed to pay a surprisingly big premium for Peregrine. They're paying more than 200% higher than what Peregrine had been trading at before the transaction was announced. So, and then over and above that, again, assuming that the project does move through the development stages, Stillwater said that they expect to have to spend somewhere around $2 billion to $2.5 billion to bring this mine into production. So it's an expensive transaction. It's, I think it was, the company had indicated that it was looking at acquisitions. They had put out copper as one of the commodities that they might be interested in. But I think This is one that analysts and investors, I think, still have a little way to go to be convinced on. A second transaction, actually in around the same sort of value range, is a bit of a different one. That's two Canadian precious metals producers, Primero Mining and Northgate Minerals, announced that they are planning to merge their businesses. In fact, Northgate will acquire Primero, but for shares. And this really is a marriage of convenience. Northgate has got a big project, Young Davidson, a mine in Ontario that's going to be coming into production, if all goes to plan, in the first quarter of 2012. But in the meantime, their only real source of revenue comes from two mines in Australia that are high cost and have not been performing particularly well. And so the benefit for Northgate is that by teaming up with Primero, they're getting cash flow from Primero's San Dimas mine. The company bought it from Goldcorp last year. That's in Mexico. And so that those funds will be able to help be able to go towards the construction and then the ramp up of Young Davidson over the coming months. The benefit to Primero, obviously Northgate as well, is that both companies have been trading relatively cheaply compared with peers. If you look at other companies that produce similar amounts of gold and silver, in similar areas, jurisdictions, you look at reserves, you look at net asset value, forecast production, all these things, the companies really argue that they are undervalued compared with their peers, and so they're hoping by bringing their companies together, getting a bit of scale, that they'll sort of merit a re-rating or revaluation by the market. So that one seems to have been quite well received. Although obviously both company share prices have also benefited a bit by the fact that gold went up to a new record as well this week.
And right at the low end of the spectrum, we have also seen some activity among junior mining companies. What are some of those announcements?
Yeah, we have seen a sort of flurry of announcements, actually a couple of unsolicited takeover offers. As you said, in the junior space, a couple of, actually on the same day, almost around the same time, we saw these announcements coming out. The bidder going public with a proposal that they'd made to the other company. Then the target company comes out with a press release saying, well, we weren't given enough time. They didn't want to, answer our questions and so on. So a bit of he said, she said. But it will be interesting to see how these play out. We've seen Claude Resources make an offer for St. Eugene Mining. Another one has been Trelawney has made an offer to buy Organ Gold. I get across the spectrum from the very biggest to these sort of minnows. There has been quite some activity this week, and obviously not the summer doldrums in terms of mining companies and corporate activity.
Well, thank you, Lizzo, for your time. That's the show for today. Join us again next week for more news and insight on mining in the Americas. I'm Martin Joaquinho for Creamer Media in Johannesburg.